Good afternoon, everyone. My name is Richard Ayres and I'm a social care advisor at Care England. And I want to welcome you to our joint three-way Cleva, Virgin Money and Care England webinar, which is entitled Safeguarding Resident Finances and Eliminating Fraud and Strengthening Trust. Fraud and mismanagement are silent risks that can really erode both finances and the trust in residents' communities. Even with the best intentions, gaps in oversight or outdated processes can really leave funds very vulnerable within the care provider community. It creates potential for financial loss, reputational damage, and strained relationships between residents, families, and care teams. Today, we're going to explore how we can spot the red flags that signal potential fraud, put in place prevention measures before issues escalate, and strengthen transparency and accountability to build lasting trust, and also to reduce exposure of personal and organisational liability through best practice governance. So by the end of today's session, we hope you walk away with a practical framework for protecting residents' funds and building fraud-free, confident communities. Now, because we have financial organisations who are regulated on the session today, I do need just to read a very short disclaimer that the webinar is for information purposes only and is not intended, nor does it contain sufficient information to make recommendations as to the suitability of financial tools, and it does not constitute financial advice. Both Cleva and Virgin, who join us today, make no representations or warranties about the accuracy or sustainability of any products mentioned in the webinar, and Care England is also not able to give financial advice. Registrants should always seek independent financial advice. So before we dive into our session, I'll hand over briefly to our speakers so they can introduce themselves from the perspective of their organisations and the topics they're going to be covering today. So first of all, can I start with Aidan?
Thank you, Richard. I'm Aidan from Cleva. We work with care providers, both residential care and supported living providers, to simplify and secure how resident funds and client funds are managed. So I'm going to share some of the sort of real world challenges we see, such as mixed funds, manual spreadsheets, cash-based systems, and sort of give examples of how digital solutions are helping to reduce both fraud risk and also staff stress, which is really important.
Well, thanks, Aidan. And yourself, Derek?
Good afternoon, everybody. My name is Derek Bringen. I am the head of the health and social care team at Virgin Money. We have a team of 23 colleagues across the UK, and we only work in the social care and healthcare markets. Personally, I've been involved in this sector exclusively for over 20 years. Residents' funds has been a topic ever since I started in that journey, so it's something that we should all be more aware of. And I'm joined by my colleague Claire, who works in our fraud department and is one of our senior colleagues in there, and we'll be hoping to answer any questions on that particular subject as well.
Thank you very much, Derek. And lastly, Zoe.
I'm Zoe. I'm a former CQC inspector, and I'll be looking at how the management of resident funds is covered by the regulations and the assessment framework, and what you should be thinking about if you want to be rated outstanding rather than just good in this area. I
want to start with the real world risks, if that's possible. And I'm going to ask my question to yourself, first of all, Aidan. From Cleva's experience, what forms of financial misconduct and exploitation are sort of most frequently uncovered within resident communities today? And why do they persist despite existing safeguards?
Usually, Richard, the opportunities for misconduct, theft or exploitation tends to be where an organisation is using antiquated, perhaps manual cash-based systems to hold resident funds, simply because there are so many potential fault lines in the whole process of managing cash. There's a lot of room for involuntary error, accidental error, and obviously that then leads to room for opportunity for theft or fraud if you are so inclined. As you know, I visit a lot of residential providers to audit what they're currently doing and how they manage the resident funds. And I still see an awful lot of the cash tin or the cash envelope, or indeed the cash envelopes within the tin. And with that situation, money has to be logged in, has to be logged out, change has to be returned, logged back in, receipts have to be put into the correct envelope. There is so much room for human error that systems can be exploited for personal gain. And reviews and audits of that type of system are always done in retrospect. They're not done in real time. So you're only getting onto the problem if you have time to dig deep enough in retrospect. You can't sort of cut it off at source. There's also a bigger generic risk of collecting and handling cash. Who goes and gets that cash? Are they insured? Sometimes the numbers being held in the cash tin are small. Sometimes they're very large, especially around Christmas time, where residents might want to buy presents for the grandchildren, etc. Is that person who collects the cash at risk of coercion from family or friends who know that they're getting the money? Is the home itself at risk by having that cash held on site? It's a care home. It's not a bank. It's not as secure as a bank. With a high turnover of staff, sometimes people will know that that money is there. So those are the sort of the generic ones. Just to give you, if I could, a couple of examples of how the risk happens in real time. So if you take an example of a care worker taking a resident out maybe a couple of times a week, part of their routine is to take them to the shops, take them out to the garden centre for a coffee. If they're doing that manually with cash, they go through the whole process of taking the money out, putting it back in. They could well be getting themselves a coffee at the same time using that money. And it's not always that easy to spot that, if they're not handing the right receipt back in, if they're not being audited carefully. Well, that coffee that's theft. That's not their money, and they're using the resident's pot, so to speak, to do that. And that can happen continually. And if they're not picked up on it, there's an assumption they're getting away with it, and that can increase, and other staff can be aware of it as well. So you have that on the smaller scale. You also have sometimes a bigger scale risk. We have a number of customers, believe it or not, who have something called a cigarette run. And once every couple of weeks, one of the staff members will be going out to buy 30 or 40 packs of cigarettes. Well, that's 500-600 quid these days, and they're going out with cash. So there is risk in them going out with that cash. There is risk if people know they have that cash. They're also coming back with, £500-600 worth of quite stealable goods. And there's no real clear system with the ones we've spoken to before they started using Cleva to make sure actually that the right cigarettes got to the right people. Was the person getting a packet for themselves? The risk is varied. Multiple small transactions where you could be getting something for yourself. Bigger transactions where you're putting yourself at risk, really, Richard, by holding in cash, in person, large sums of money in this digital age. We need to be changing that, I think.
Quite a vivid picture of fraud and abuse, but also mistakes. It feels like there's an awful lot of reconciliation that needs to be done somewhere on the line, and human error. It's someone's time, isn't it? And I think we've already got a sector that's built on spreadsheets, and we need to kind of get away from that, because I've seen so many care businesses run off the back of a spreadsheet. But going out to the bank and drawing out large sums of money is also a significant risk, and trying to find a bank these days, if you're in one of the remote care homes, finding a bank is quite a challenge. Let's bring it sort of over to Virgin Money to expand on sort of the financial governance sort of aspects. So from Virgin Money's experience, Derek, what are the most common weaknesses or risks that you see around how providers manage their finances, and kind of what safeguards, if any, exist within the banking system to protect them?
Yeah, so I think Aidan's covered a lot of the sort of fundamental basic risks that are involved, but the very nature of how these arrangements work will differ from care home to care home setting. So the governance becomes quite tricky with regard to how much is being taken out, how much has been spent, what's it been spent on, receipts, money going back into the account or the tin, where errors can arise as a consequence of that. Family member, my mother-in-law's in care, I get asked to put £60 into the kitty because she's spent that money. I get a sort of invoice that shows me what the money's been spent on that's been in there before, but the amount of time it must take for somebody to actually pull all that together when we are sort of seeing a sector that's, time is hugely precious. So that alone would suggest that sometimes we don't spend the time on it either. So we might miss things. We might not record something. Then you leave yourself very open to, well, I gave you £60 last week. Sure, we can't have spent £60 already. Why does this not quite tally? And then you just throw yourself open to sort of subjective questioning. So that governance piece for me is the main sort of issue, whereas I think digital solutions are more identifiable in terms of being able to track where funds have been withdrawn or spent. The cash piece is difficult because you're putting yourself at risk for being responsible for somebody else's money. And then there's a whole process behind that in terms of the mandate. What mandates do you have that allow you to be in control of a resident's funds? What does that look like? Is there a formal agreement? Some residents will not have capacity, so there should be formal arrangements in place to identify that lack of capacity and therefore, pass that responsibility formally on to a family member or somebody in the care setting itself. How much of that actually gets followed through and recorded. So I think it is quite wide open to potential abuse and just error. I think human error is probably one of the main issues, just due to time pressures and who's in charge of that process as well, who's ultimately responsible for it. Again, do we actually know who that is? In terms of what does the bank do to try and protect people? Very difficult when it's in that sort of situation. We do hear of people giving, especially in domiciliary care, giving the carer their card and their PIN number. Could you nip out and get me such and such? And they take the card and the PIN number. Widely known. I mean, we're not breaking any rules here. It's widely known that happens because that appears to be the only sort of short-term solution available. But I mean, I can bring in Claire in terms to people giving away PIN numbers and some of the chaos that causes.
Yeah, absolutely. Thanks, Derek. I guess when you're looking at it from like the bank account perspective, there is features in place there to keep on top of what is happening within those individual bank accounts, whether that's one account that keeps all the residents' funds in one or separate ones, but some features from the bank in terms of like dual authorization to ensure that there's just not one person has control over everything and is able to change payee details, update personal details, or make payments by themselves. There has to be two people to be able to do that sort of thing. Or even simple things like turning on transaction notifications, so you get notifications when any kind of activity happens on your account is really simple but useful way to do it. I guess from a bank's perspective, and particularly from a fraud team perspective, is where I said is that obviously we have systems and rules in place that monitor all the transactions that happen across at account level, and if there's anything suspicious or unusual happening within there, quite often those payments may be put on hold, and we'll do some investigations first before we will release those payments. So there's obviously lots of systems and things in place, procedures in place within the bank to spot that, to try and prevent that happening in the first place, really.
So we really do need to tap into that banking advice that the system offers us with the kind of the dual utilisation. Turning on notifications is a really good idea. I didn't even know that was a function on my bank account until very recently, just to kind of see, because Derek said that subjective questioning when you go back, it's like the conversation I had with my children. Well, what have you spent the money on? And the amount of time administrators must spend trying to kind of reconcile cash and payments is incredibly tiresome and probably unnecessary. And again, so open for mistakes, but it really does highlight how well-meaning practice can really create risk in the process. And I think maybe it's probably a good opportunity to bring Zoe in to really talk about if we can understand how the CQC views this during inspection and which kind of quality statements cover the management residence funds, and how closely would inspectors scrutinise the area during inspection, and what evidence do you think an inspector would need to see on an inspection to be able to rate a care provider?
It's definitely one of those areas like it's like asking which quality statements cover resident bathing. It's probably most of them when you drill down to it, because it's such a basic inherent thing to what we do. It touches on quite a lot. So on a very obvious basic level, there's the managing risk aspects in the safe key question and good governance under well led, but it also definitely speaks to quality statements under caring around people being independent and that sort of thing, and responsive, keeping people's financial business very person-centered, and also even effective, doing things with people's consent, understanding that capacity in financial matters isn't one question. Like, we know that consent should be around a question, so financial matters is usually several questions. Understanding where that comes into consent properly. Generally, in terms of evidence, we're looking at people's experience, their feedback, and the processes. So what I really want to see when I'm going in somewhere to do a mock inspection is that there are robust procedures that reflect not only what people are doing, but practically address the needs of that specific service. You can have generic financial procedures, but they don't actually reflect what's going on in a service, and they may as well not exist. So that's got to be done properly. Awareness of the risks. So there's got to be risk assessment around the risks for people around managing their own finances or not. Got to be that transparency and auditing. If you're not auditing, you may as well not be doing it. It may as well all be written on a receipt in a tin. The auditing of it all is really important. You've got to be up to date on that. It's good basic stuff to get a grip on.
You said a huge amount there. I always come back to the other thing is evidence as well. Is that evidence that you're doing what you'll say you're doing. You talked about the policy. You can have a policy. It means nothing. You can download a policy from the internet. You've got to have the evidence that it's actually embedded within the service, and you have spoken to those residents multiple times, because their capacity may be variable. So you do need to, as you said, keep asking. If it's not written down with the CQC, it didn't happen, did it?
There's nothing more frustrating as well than going in and discovering that all of the staff are doing everything properly. They can tell you they're doing it properly. When you audit their records, you can see they're doing it properly, but the managers never audited them because they trust the carers or whatever. That can be that's a particularly frustrating situation to find.
We do need to be careful when cash and money, whether it's paper money, whether it's electronic money or digital, we do need to be sensitive, because any form can be open to a form of abuse. But I think probably just maybe coming back to the financial handling itself and the risk that can create. I think maybe if I come back to yourself, Derek and Claire, in terms of mixed accounting and insolvency risk, is it ever appropriate or legally defensible for a care provider to hold multiple residents' funds within a single business account? And what happens? I think I did see a lady join here who I know who knows a lot about insolvency. She might want to come in with a question in the chat. What happens if a provider ceases trading or goes into administration, and you've got all of that resident money into one account?
Yeah, and this is the real crux of the matter and how complex it is, because I see some people in the chat talking about the inability to open a bank account specifically for a resident due to a whole host of legal reasons and identity reasons. And that's always been a challenge, I think, in the sector and for the banks that support the sector as to how we can overcome that issue. And I did a lot of work previously. I was employed, and we spent a lot of time trying to come up with some financial solution to operate residents' accounts, but have that identification and that integrity behind them. But the red tape involved, the amount of paperwork involved to establish that, it was cumbersome both from a provider and resident perspective, but also from a banking perspective to actually pull all that together and then manage it. And the turnover of people employed in the care sector and residents as well makes that a very difficult process. So I can see why it would be easier just to bundle all the residents' accounts into one particular bucket in the name of the care service, and then have this ledger sitting to the side that allows you to identify what makes up that number. But ultimately, that, whilst we can call it residents' funds, that does sit in the name of the business itself. So I think if that business was to fail, you're then getting into quite a bit of complication as to whose are those funds, and how do you identify the ownership of those funds, what paperwork sits behind it, and is it deemed that it's just part of the overall business itself in terms of its cash balances. So I think it's quite a grey area. It'd be interesting to hear the guest that's joined that's got the insolvency background, but I certainly don't think it's an area you want to be exposing yourself to particularly widely. But as I say, at the moment, from a banking perspective, it's quite a challenge to set up something. The Care Inspectorate in Scotland had a real beef about this particular topic pre-pandemic, and they were really being quite forceful on care providers to change the way that they were handling residents' funds. But of course, we came across just a blank wall, because they came to us and said, "What can you do?" And we said, "Well, unless the system changes, or there's some framework that's put in place which is akin to solicitors' funds." So solicitors hold funds for clients, but there's a specific legal framework around about how that is achieved and identified and documented. And that's a widely used practice in banking, but it's not so easy in the residential care or domiciliary care or nursing care section. It's just more complicated.
I think there's regulatory consequences from a financial regulatory perspective, but Zoe made a point before around the kind of the turnover, or you yourself made a point around the turnover of staff and also of residents. It means that continual need to kind of readdress the same point over and again. But maybe if I just switch to you, Zoe, what sort of regulatory / legal consequences can a provider face if it's found to be mismanaging or inappropriately accessing residents' funds from a CQC's perspective?
Well, obviously that depends. Even at what seems like the sort of lowest level of sanction, in that they say something snarky about your financial mismanagement in your report, at this stage you could be stuck with that for years. Even a minor quibble can become a millstone round your neck, I should point out. But obviously we are talking about more serious consequences here. And the regulations that financial management speaks to, 12, which is the general safeness, 17, which is good governance, and 11, which is mental capacity and consent, they're all prosecutable regulations. So the CQC can go as far as they can with financial stuff if they want to, depending on what they assess the level of risk or harm to people has been. So there's the usual sliding scale of consequences, warning notices, and so on and so forth. But the regulations involved are the most serious and prosecutable ones. And the CQC will probably be merciless. It's certainly an area I always was completely without mercy in, I must admit.
We've seen fines imposed by the CQC on home managers of £45,000 more than they're actually earning in a year's salary.
Yeah.
So we've seen that the CQC can take action. So I think kind of on the more practical side, how providers should kind of close and reconcile accounts correctly. If a resident, Derek or Claire, sadly departs us, what formal sort of procedures or processes should providers follow to ensure funds are securely and transparently transferred to the rightful beneficiaries? Especially when we recognise some working age accounts can drive to very significant amounts if they're having other benefits, managed by the care provider.
The whole issue of deceased account holders and bereavement, there are firm processes that exist across the whole banking sector as to how those funds can or should be released and to whom. We've got a specific area within our business that tries to support people in that journey. It can be quite complicated. There's sort of certain limits as well as to how much funds get captured, or there's got to be legal involvement and lawyers involved in breaking up estates. Yeah, again, it opens yourself to potential issues if it's not been managed properly. It's all about audit trail in this sort of journey of residents' funds. It's being able to manage that journey of the cash or the funds, how they've been used, how that's documented, how that's validated, and then if something like this happens, that you've got a firm handle on what funds are actually involved in that particular instance. I'm sure it's happened. People have passed away and there'll be residents' funds sitting in an account that maybe have been missed. It's
a very transactional piece of work that you need to do, but you need to be on top of it because you need to be able to evidence exactly what's happened to every penny, where it's gone. So incredibly labour intensive.
But it's not your money at the end of the day. You've got to remember that. It's not your money.
It is other people's money, and we are accountable for it, and we're responsible. And as Toby said, you can sit with that rating for quite some time. So if you get it wrong, you might even come out with a good rating, but you might still have some red flags around, being requires improvement in a couple of areas, and that can stick with you for a very long time. And no one wants sort of financial mismanagement on their record, certainly not in the public domain. I think looking into, we've heard a lot of what the issues are, but if we just look at sort of positive practice and innovation, Aidan, I think it's a good point to kind of bring you in. What practical lessons or frameworks can be drawn from organisations that successfully reduced or eliminated financial abuse and fraud risk altogether across their organisations?
From my point of view, when people have moved away from this very sort of manual cash-based process for quite archaic systems, there's three main benefits that they will get. First of all, they're going to get visibility. So every penny, every transaction, every interaction with the client's monies can be seen in real time with digital systems. So the manager of that care home, they can see exactly who has spent what, for who, when, where, how much, etc., etc. So if someone is acting illegally, intentionally or not, that's going to be picked up a lot quicker than if you do retrospective audits of 1,000 receipts and 1,000 shitties, as people call it, of pieces of paper logging money in and out. The second thing you get is just much greater efficiency. We did an exercise with a number of our domiciliary care clients as to how much admin work went into each client per month in terms of managing all of the shopping and spending that happened for them across all the care stuff. It's about 70 minutes per client. If you go digital, you're immediately removing loads of man hours of updating manual records. You are eliminating the need to go and collect that cash and all the risk associated with that we've discussed, and holding the cash on site. So you have an efficiency angle, and you have accountability. So, a strong, resilient, easy to use system, it boosts resident confidence because they're confident in how their money is being spent, if it is being spent for them as opposed to with them. The families are more confident. So the care provider isn't getting phone calls endlessly going, well, I sent you 20 quid and where is it? You sort of eliminate that. There's a feeling of comfort that every transaction is genuine, because certainly with our system, the family can see those transactions in real time as well, which actually works really well. If you're at a level of care where you're still actively going out, if you've got a carer who is taking you, to the garden centre once a week or out to the shops a couple of times a week, and it's on a Tuesday, mum could be in Land's End, you could be in John O'Groats, but you can see, oh, good, there's been a transaction at Boots, and mum's gone to the shops, and it's for a product that she needs. It's not, or if there's a query on it, you can go back to the care provider. So it boosts staff confidence and morale. I know loads of care staff who I've spoken to who, when there's been a query, 50p has been missing or a receipt hasn't gone back, they've paid with their own money. They've just said, oh, I must have lost it. There's the money back. In dom care, loads of carers still pay with their own money and claim it back, which we shouldn't really be asking them to do. They shouldn't be losing that cash up front. The system should sort of take care of that for you. So those are the three main things: visibility, efficiency, and accountability. And it just encourages people to act better. And unless you're a fool, when you see visibility on those systems, if you're thinking of doing something illegal, you're not going to, because everyone can see it.
I think that's really important around visibility and evidence of every transaction in digital systems. That's where it becomes automated and takes a lot of that manual processing and work away. And I think if you're looking at an average older person's care home with like 30, 40 residents, taking 70 minutes to transact, to reconcile once a month, that's a huge amount of time that administrators spent processing payments. So digitally, that can be done a lot quicker. I also think you've just kind of stumbled on a point there around people who have to pay out their wages and claim back. And potentially that borders on modern slavery, because you are not allowed to pay anyone less than national minimum wage. So if someone is spending out of their own accounts and reclaiming it, then potentially they're actually having that week less than the hours they've earned. That is a definition of modern slavery. So there's definitely some legalities there. But just kind of drawing the panel to a close before we go to questions, what would it look like to achieve good and outstanding as a rating in the management of resident funds?
As we've said repeatedly, you've got to get those basics right. If you're not getting the basics right, then you won't get that good, because good is just, we are meeting the regulations. So you really have to be getting it right to get that good. We have been disparaging about the cash tins, but you really do need to be as confident as the manager who does it all at the end of the day, very carefully counting all the money with the receipts there and then on the spot. A computerized system to do that for you is just beautiful. Accountability for all that is it just makes it so much easier to inspect, because you can see exactly who's done what and when. It's just so much easier to do. Financial management can very much be part of an outstanding sort of service of care. The basics, so you've got to make sure staff are being trained from the start into what the service's expectations are. You need to be carefully escalating any concerns, notifying the CQC and anyone else you need to be notifying, and you've got to have that oversight of what you're doing. In terms of pushing it even further into being outstanding, you need to be really looking at the areas that are traditionally where services show off. So things like positive risk taking, where you're supporting people to maybe be a bit more independent with their money in order to bring benefits to their life. And there is some risk involved in that. Maybe there will be a small amount of loss, but that might bring independence and joy into somebody's life in a different way. Supported decision making to promote people's independence, working in partnership with them and the people that are important to them to make sure that people are getting the best out of their money. Anything you can do to promote and restore people's independence, especially if they're coming into a home from the community. They might have been struggling for a while, or they might not have had the support that they've needed before to get on top of what's happening with their money. You can really help people with that. There are so many more opportunities these days to empower people through technology. There's so many modern solutions and creative ways for people to do stuff these days. Innovation is always one of those buzzwords for being outstanding. There's plenty of opportunity for that now. Any transparency has to be accessible for the actual service users as well. So you can have the best accounting in the world, but if they can't read it themselves, so you need to present information to them in an accessible way as well about what you're doing with their finances. Co-production of care plans around finances. And for a lot of people, you're going to have to be aware of the kind of modern dangers that especially older people are facing around scams, services in the community. I mean, are your care workers really equipped to recognise a modern scam? Some of these are so sophisticated now, especially with the AI pretending to be like relatives in peril and stuff. You know, would a carer necessarily think, oh, if a lady casually mentioned, oh, my daughter phoned today, I had to give us, you know, you've really got to, you're anticipating problems as well as responding to them and preventing them. That touches on people's human rights though as well, and their personal priorities. So you've got to be really careful not to put your values, especially with younger people, in maybe in a supported living context. If someone wants to spend all their money in DVDs and tattoos, that's entirely up to them. And in fact, how you facilitate somebody's hobbies through their finances and encourage them to make sensible decisions can be evidence of outstanding work. Like maybe supporting people to save up for those express goals, or a really exciting tattoo that they think, I'm going back to tattoos a lot, I'm sorry. But you know what I mean, you find out what people are really interested in. And you've always got to have that culture of improvement and learning, so that if something does go wrong, you learn from it. It's not swept under the rugs. It's there. You can see the records. A good turnaround on something will always impress an inspector, especially when it's a key thing like this. And how you respond to mistakes and track near misses as well can be important. I think that's it. It's really just about being outstanding for your people, not the inspector. You're working for your people, not the inspector.
That's incredible. I think you just should drop a mic at that point, Zoe. That's really, really helpful. And I think, you know, you've not said whether a digital system is better or worse than a paper-based system. There, you basically explained what the CQC would kind of look for, and we know they don't very often take a position over digital systems. But actually, what you're saying is it's got to be a good system, it's got to be robust, it's got to be auditable, it's got to be diligent, transparent, easy to use, and actually, logic says the digital system is probably going to help you get there a lot quicker than a paper-based Excel and a cash tin in a drawer somewhere, to be able to kind of evidence excellence. That's amazing. Thank you so much to the panel for those. So just getting to the questions in the chat that we have so far, there's quite a few. How do we get around to becoming a cashless society when vulnerable people are not able to open bank accounts, as they do not have the ability to consent to terms and conditions? I think actually, Aidan, that's probably quite a good one for you and the Cleva solution, because I think we sort of navigate some of that with that product. Would you like to comment on that point?
In answering that, we need to realise there's different levels of care provider we're going to be talking about here. So if someone doesn't have the capacity to open an account, depending on their age, they could well be under the deputyship of the local authority or under an appointee who's having to sort of do that work for them. At the moment, those people are receiving an awful lot of their day-to-day money through cash. They might be getting it through vouchers. They might be getting it through text messages to their phones, which they can then exchange for cash at the cash point. Ultimately, with us, if we are contracting with their provider, be it a care provider or be it their local authority or with the deputy, the money which is due to them, which that deputy is managing, can come into the Cleva ecosystem, whereby, you know, their spending money, which is normally the main piece that we're managing, can come to them. But it is an issue, opening bank accounts of people without capacity, opening bank accounts of people who are vulnerable or at risk, or who don't have any sort of digital or credit history, is an increasing problem. The banks, in terms of the deputyship ones, there's a process that has to happen, and it does involve a lot of sort of court protection forms, so it's not something that can immediately happen. But yeah, we can manage that.
We haven't really talked about what the Cleva product is, a digital card-based product where we can have multiple wallets to digitally manage the fund, and it's the alternative to the paper-based system. But the Cleva product itself, does that require the permission or the consent of the individual to have a wallet set up on their behalf? And how can we navigate that kind of any permissions that are required there?
The permission, if you take it in a care organisation, residential care, for example, so the care provider would say, okay, I've got 10 residents here. I want to manage their cash and their day-to-day spending. I want to manage it through Cleva. So 10 wallets will be created, and those will be their individual pots. So think of the envelopes in the tin. That's now digitized. Money is sat in there, and the staff or the resident will get a Cleva card, and they can then spend from that wallet. So in that situation, our conversation and our agreement is with the care provider, not the individual. In the case of supported living, it's the same. In the case of deputyship companies and local authority deputies, it's the local authority that we're contracting with, because they are making the financial decisions on behalf of that client. So the court has instructed them to act on behalf of that client, and they will open a Cleva wallet. And in some cases, that wallet will be purely for the individual to spend their own money. And in some cases, it will be for the care team who support that individual to spend the money. And if the individual has certain capacity issues, we can tweak their particular wallet so that they can maybe not spend so much online because they've got a bad history on shopping, maybe not be able to take cash out because there's bad people around them, etc., etc. So we flex it according to the individual's needs, but we're contracting with a corporate entity as a rule.
Thank you for explaining that, because I'm conscious we didn't explain that at the top of the call, and that wasn't the purpose of this session, but I think it's quite important. But so the point, I think it was Amanda and Pat who raised that around, the cashless society, vulnerable people unable to get bank accounts. The Cleva solution actually does help solve that problem. So that's really helpful.
Yes, they don't need the bank account. Yeah.
Another one coming here around universal credit. They also want to see statements from individuals' accounts. And again, if you've got a bank account, then obviously you'd have to pull that from the bank account. If your spending is from a Cleva card, I suppose that could be act as a statement, because you can have a statement on an individual's transactions, I'm assuming.
Yeah, so if they want to see what spend has happened, money out from Cleva, we can export that for them. But don't forget the universal credit payment still has to be paid into a bank account at source, whether it's being managed by the individual or whether it's being managed by the local authority under deputyship.
What about if you have a designated client account which holds resident funds? Is that acceptable? That might be over to yourself, Derek.
The word designated clients account, banks do hold designated clients accounts, but they're attributed to organisations that are part of a professional body. So the Law Society, for example, they have formal arrangements whereby you can open a designated client account under your membership of that particular profession. It's the same with accountants. So designated clients accounts, really, they're specifically for those kind of entities. They can be opened in the name of individuals, but they can also be opened in the name of collective. But they have to have that governance sitting over them, that professional body and network, and that accreditation that sits above it to allow them to operate in that manner.
Oh, no, fantastic. Thank you very much. That's helpful. Just moving on to interest. So this again probably comes back to you, Derek and Claire. If it's a care provider account, earning interest of residents' money, how is that interest given back to the residents?
Well, that would be down to the provider to allocate that interest, which in itself would be quite complex, because there'll be different balances for different people at different times. The funds shifting around, quite a challenging one for equal and appropriate distribution.
Aidan, just on the other side, I suppose, if someone's got a card-based product, they could build up quite a sum of money. Are there any options there for interest on card-based products where people have their money in these virtual accounts?
Not on a prepaid system that we run, but one thing that we would monitor is, why is money building up on that card? So if that card is really being used for day-to-day spending, day-to-day expenses, it wouldn't really be used as a savings account, and it wouldn't necessarily have their benefits paid directly onto it. You would keep an eye on that, and there'd be a limit as to how much money could go through those cards each year.
Another question probably to you, Derek, is around are clubs and charity accounts a good idea for the shared housing kind of kitty money, or are there better accounts to kind of consider?
If you're going to open a club account, you have to have a formal club, and you have to have the appropriate mandates and in place, as you would expect for any club, bowling club, tennis club, golf club, treasurer, people on committees, etc. That's how we would expect those mandates to be completed. So you'd have to create a club. Charities, exactly. This is similar thing. You'd have to be a registered charity. You can't open a charity account just because you think you want to call an account a charity account. You really, to do that formally, have to have all the appropriate registration and the appropriate mandates in place. So it's not an easy fit, that one.
A lot of bureaucracy. Aidan, you put your hand up at that point.
We have clients in residential and supported who need to have almost like a kitty account, because they might be booking an outing for 10 of the residents. They might be booking pictures of the cinema. Some of them might be doing the weekly shop, and rather than take the money from each individual's client wallet at source, they can create almost like a shared house account, pay from that, and then within the system move money from each resident who's gone on that trip each time. So yeah, it is something that comes up a lot, because there's a lot of shared expenses within the house, so to speak.
And that leads quite nicely to another question I received on email here. I'm going to read it to you. We support adults with profound and multiple learning disabilities. The majority of our clients are deemed to not have capacity for financial decisions, and they have appointees to manage their finances. They solely use cash, which is sent to the care provider electronically, and which they then have to issue to the individual homes for them to use. Increasingly, they face challenge of retailers and vendors only taking card payments and not the cash. For example, a trip to the theatre. Currently, their workaround is to make the purchase using a company payment card and then recharge by invoice to the financial appointee. This takes away independence for the clients as they are not able to carry out transactions themselves. They're very keen to explore if there are any solutions for our clients who lack capacity. I think that's actually the perfect request for a conversation with yourself around the Cleva card product, because that's exactly what it does, if I understood correctly.
So we kick in where that appointee has sent the money. They would still transfer money to the care provider. The money would then go, I'm talking in simple terms here, the money would then go into the individual's wallet. The individual will have a Cleva card. So he or she would go out to the shops, would go to a coffee shop that doesn't take cash. If they've got capacity to use their card, or with the help of a colleague, they can then use contactless at that establishment, and they've got independence and they're treated the same as everyone else. There may be others, Richard, who don't have the capacity to manage a card, and that's when they will go out with their support workers, and the support worker will buy the coffee for them, but it will come from the client's wallet. So in supported living, that's a regular situation with money being sort of fed into the system via their appointee or their deputy.
Brilliant. And Zoe, I see you've got your hand up at that point as well.
Yeah, I was just going to say that's exactly the kind of situation I was speaking about, where a provider has identified a limitation of the way that they do things, and how you address that can really be useful inspection evidence when the time comes.
Pat, who just said that we use security pouches with a unique one-off tag number for all entries, signed off by 2 staff. All cash is audited weekly by care managers and quarterly by an internal audit team. Yes, very time consuming, but they have very few errors. So again, that's the kind of probably the more, that's a secure version of the sort of the traditional way of managing cash. And I think what we're trying to maybe explain today is that there could be some other solutions that, again, might help to ease the burden of some of that labour-intensive aspects and give you additional visibility and transparency. Maybe when we send the information out afterwards, it might be something that, Pat, you want to look up a Cleva card to see if that could help you out in any way, and maybe you might want to request a call back from Aidan to discuss in more detail. Lucy's just said it's worth providers being aware that of insurance restrictions. So they supported a service at one point who had a whole safe stolen, could be the cash tin, £11,000 of client funds stolen. They were only insured for £5,000. Lucy does work with a lot of insolvency practitioners as well for care providers who are struggling. And we were talking earlier about insolvency, Lucy, and some care providers manage all in their main bank account. They've got a spreadsheet that says how much is owed to Margaret versus Jim versus Fred. What happens when an organisation becomes insolvent and becomes bankrupt? What happens to that resident money, and how do you make sure the residents get what they're owed? And are there any risks with that you've come across?
Yeah, there's a lot of risks. It needs to be moved in and out via one main account, but we often see it get very complicated when it goes into insolvency proceedings, because there are certain regulations and investigations that have to happen, and that could mean that people end up personally liable for monies that they've been in control of and then not insured has been ring-fenced for those people. So we've seen NMC referrals, we've seen directors get struck off or be restricted from being directors of companies, not just for those issues, but they are compounded or they trigger further investigations into activities of the company, should there be any kind of unsure or skepticism as to whether or not it was done in good faith. And sometimes it is held in good faith and the records are just not up to date, but it could really come back and bite people. So to have a client account, a separate card, cash card or arrangement whereby monies are kept completely separately, and be that cash in a safe, and it was the whole safe that got stolen. It was jimmied off a wall and taken through a window. It's worth having that money completely separate and counted for, so that it doesn't come back on any individual. And that could be the directors of the business, or it could be the home manager. And home managers have got hard enough work as it is at the moment to be liable for other people's money.
It's fantastic, Lucy. Thank you for coming on. That was I saw when your name popped up. I thought when insolvency happened,
it's been really interesting. It's good to join this.
Thank you very much. Well, I'm going to draw it to a close in a second because I have got some more questions, and there's a conversation in the chat at the moment. We have a prepaid card system for the individuals we support. The scheme is well worth doing to promote independence. The feedback we have received already since introducing it has been really good. The scheme is working well. We also have a prepaid card for household and for shared costs. So talking in favour of card products. And there was another point made, is there an issue with PIN numbers, as clients would not be able to remember PINs? And I think that was responded again saying, actually, yeah, we can manage the PIN numbers through a portal. So there's a really good argument there for for card-based products to help solve this problem. It's great to see that there's some people using and engaging with those, and I think it does sound like from a regulatory perspective that actually that digital capability seems to add a lot of enhancement to the process. So I just want to wrap up, if that's okay, to say a huge thank you to everyone who has joined today. It's been really, really helpful to understand things from a regulatory perspective, from a card provider's perspective, and also from a banking perspective. Really, really helpful. Thank you all for joining us. We hope that you leave with some new insights and practical ideas, greater confidence in predicting residents' funds and building trust within your services. Please make sure you are insured for handling cash if you are doing that, and what your limits are, and you don't breach those limits, because that's a really good point there. If you have a theft, you may not be insured for it. And thank you. We'll keep you informed with any other upcoming webinars that meet this criteria in the future. Thank you all. Take care.